It's very hard to trace through the effects of a change in tax policy into things like wage growth and the economy, but let me try. So if lower corporate taxes should lead to higher investment, and the effect is not easy to estimate, but you would think, and the studies find that it should lead to higher investment. Higher investment should lead to higher productivity over time, and higher productivity should lead to higher wages over time. At the December meeting, the median participant called for 3 rate increases in 2018. Now, since then, we will submit another projection, all of us, in 3 weeks. But since then, what we've seen is incoming data that suggests a strengthening in the economy. We've seen continuing strength in the labor market. We've seen some data that will, in my case, add some confidence to my view that inflation is moving up to target. We've also seen continued strength around the globe, and we've seen fiscal policy become more stimulative. So I think each of us is going to be taking the developments since the December meeting into account and writing down our new rate paths as we go into the March meeting, and I wouldn't want to prejudge that. My personal outlook for the economy has strengthened since December, and again, each member of the FOMC is going to be writing down a new set of projections and a new estimate of appropriate monetary policy as we go into the March meeting, which begins 3 weeks from today. And so I wouldn't want to prejudge that new set of projections, but we'll be taking into account everything that's happened since December.
Thank you.
Our current framework says that the committee would be concerned with sustained or persistent deviations of inflation above or below 2%. So we understand that inflation is going to be buffeted by various factors and that it may not be exactly at 2%, it'll be above and it'll be below, and we see it as a symmetric objective. And I would say that framework is working. The market understands it. We've been trying to get up to 2%, but generally speaking, inflation's been low and stable for 15 or 20 years now. If I remember what it was like back when I was an Undersecretary of the Treasury in the 1990s, the Fed didn't even publish a post-meeting statement. And now you look at the massive number of things we publish, we're much more transparent. I think we can continue on that path. We're never done with that. In regulation, I think it's very important that we be transparent. In fact, we're working across a broad range of issues there, including, I would point out, stress testing. We've got a package of transparency regulations. And in general, I think it's appropriate for us to always be working on that. I haven't updated my own projections, but I'll just say generally that it does feel to me that the next couple of years look quite strong. And you should see strong demand from consumers. You should see businesses investing, and I would expect the next 2 years on the current path to be good years for the economy.